Bloomberg Equality. I'm Caroline Hyde.
And I'm Romaine Bostick. Every Thursday through the month of June, we're broadening our coverage of markets and the economy to take an all-inclusive look at what social equity and equality truly mean for companies, for investors, and ultimately for our collective global prosperity. We're going to go deep into several key topics, including the divisive politics around gender identity and fair access to capital.
And today, that's where we start, Romaine. Access to capital. Over the past year, look, the global economic landscape has changed. Aftershocks from the pandemic, from the war in Ukraine, rising interest rates, the recent turmoil in the banking sector here in the US, all flashed those warning signals for global lenders. Now, while the latest Fed lending data has started to stabilize, back in March, US bank lending contracts, they contracted by the most on record, seeing a drop of more than $105 billion. That's, of course, amid the collapse of several lenders, including Silicon Valley Bank. Now, tightening credit conditions signal the end of cheap money. And, well, we've been used to that in years past. So what does it mean? What does this mean for the financing gap that's already faced by developing nations, by diverse startup founders, by small business owners, who have often been shut out of paths to capital, Romaine? It's the key question of, it's getting harder for the people who are already finding it hard.
That's exactly the point here. We've talked so much over the past few years about how you broaden, how you diversify sort of the startup environment, the VC environment. But of course, ultimately, it still comes down to not just interest and not just effort, but also the money as well here. You take a look at the data behind me when you talk about the number of minority-owned firms, and you put that up against the number of firms out there by non-minorities, you can see the differential there. We're still only about maybe, what, a quarter, barely a quarter of the total amount there. That's at least based on what the current census data out there, Caroline. And in order to close that gap, it's got to be about more than just wanting to close the gap. That money, it's got to flow into it as well.
And not only into large businesses, small businesses too. We can dive right in there with Eric Taylor, CEO of Trident. It's a private equity firm focused on acquiring US-based small businesses, an emphasis on leveraging diversity, equity, and inclusion as a competitive advantage. So, Eric, how, when you identify a company that is ripe for your help, to ensure that you instill that within the focus of the business?
Sure. So first of all, thank you so much for having me on, guys. Really excited to be here. At Trident, we focus on small businesses because we think it's incredibly underpenetrated by the asset management industry at large. And there's really two things that we're doing that we think is a little bit different. The first is incorporating technology to begin to eliminate some of the systemic biases that people tend to see in underwriting. That means that we're thinking about who our operators are. We're thinking about diversity of our management teams. We're thinking about actual diversity of the underlying owners of these businesses. And given the entire purpose of what we're doing is buying and building family-owned small businesses, incorporating diversity into that literal algorithm ensures that we're actually smoothing out some of those racial biases. And you know, what that means at the end of the day is that our investing dollars are going into places that we think are A, underpenetrated, B, able to create more value, and C, obviously, more diverse.
Talk to us about the creating value, because that's for many. Yes, there was this moment of, well, reckoning back in 2020. Sure. People knew what the moral and right thing was to do, but ultimately to solve these things, you need to show that it makes good business sense as well. How have you shown that in terms of profitability, for example? How does it work? Sure.
Well, A, I think it helps when you are investing in an asset class that is naturally underpenetrated and you know, relatively devoid of competition. So that's sort of where we start. We generally don't tend to see other big asset managers playing in the same sandbox, where we are. And so as a result, we find opportunities that others don't. But you specifically asked about post-investment value creation, so you know, I mentioned that. When we think about how we build businesses post-transaction, we incorporate a number of techniques that mean that the suppliers that we're using are diverse. It means that we're putting capital in Black-owned banks. It means that when we're bringing in new members of the C-suite, we've got sort of diversity checkpoints that we're using. It means that consultants that we're bringing in to help us build businesses are diverse. And so you end up with a more diverse business. You end up with a business that's actually creating more value because we're bringing in institutional quality techniques to actually build those companies. And so it's a win-win for both.
Talk about the raising of capital, though, and where this money is going to come from. When we talk about closing the gap and addressing some of the issues that you just pointed out, at the end of the day, you still need those millions, those billions, really, to flow.
Totally. You have trillions, really, if you think about it. As we've thought about this sort of gap in access to capital, I think there's really four places where capital tends to come from and flow. So first is public funds. You saw that during the pandemic, the National Bureau of Economic Research effectively published that blacks had not the same access to PPP loans from small and mid-sized banks, and they actually said that the reason was subjective in nature. So public funds. Then on to bank credit.
Right.
The Milken Institute said that over 70% of U.S. Census tracts that are minority don't even have bank branches. And so if you think about the legacy of credit in this country, if you're black, brown, or female, it's typically harder for you to get access to credit. Third is VC funding. We know that less than 2% of VC funding tends to go to black, brown, and women-owned businesses. And so that's a problem. Now we at Trident, we can't fix all of those problems.
You can't fix all of those, but I just want to stop you there because you used the word subjective in terms of PPP loans, and we've seen this in other areas too when it comes to raising capital. How do you apply sort of something that is systematic, something that is data-driven, to a problem that is often subjective?
Well, I think first of all, you have to look at the root of it. When I say subjective, I'm talking about natural biases that people have, right? And I think when you're thinking about building businesses or where to allocate capital, people have in their mind sort of what they're used to, where capital should go. When in fact, when you think about underwriting, usually you're thinking about financial data. When you think about mortgages, you're thinking about appraisals or credit scores. When you're thinking about business loans, you're thinking about cash flow or asset value. And so it's trying to make sure that in your underwriting and in your analysis, those numbers are coming up to the top, as opposed to someone's personal view on who they're lending or who they're investing in. And I think over time, what we're really seeing is that it's not just in the underwriting, but it's in who's doing the underwriting. To the extent that folks have more diverse organizations, we can see that when it comes to allocators, when it comes to asset managers, when it comes to banks, you're actually seeing better results, not only economically, but also from a diverse perspective.
All right, a great conversation, Eric, and I think we have to continue this another time. Eric Taylor there, he's the CEO over at Trident, a private equity firm focused here on acquiring small businesses, of course, with the focus on minorities. We're going to continue this conversation because, as we mentioned, we talk about how the landscape has changed over the past few years. The social reckoning that Caroline was just talking about back in 2020, it caused a lot of venture capitalists to rethink where they funneled their money. That led to more capital reaching diverse founders. That's a good thing. But a survey out by Morgan Stanley shows that progress stalling. Our next guest is a co-founder of a startup and sees VC funding as a way to help close the persistent wealth gaps. Angel Wang is Chief Growth Officer over at Anise Health, and she joins us right now. Angel, let's start there here about closing that gap through the power of money and, more importantly, through the power of funding these businesses.
Absolutely. I am a woman of color in the founding team of a startup, and all of the discrimination and bias that Eric talked about are things that our founding team faced during our fundraising challenge. A lot of that subjectivity comes because in early stage venture capital investing, you're trying to de-risk your choice by relying on intangible qualities such as, do I trust the team? Do I think they're going to win in the market? Do they look like the types of entrepreneurs that I have believed have won before? And as long as we can expand our definition of what a successful entrepreneur looks like, we can allow those entrepreneurs to thrive as well.
Well, let's talk about what a successful entrepreneur looks like, Angel. There's been a lot of talk about the racial reckoning out of 2020, a racial reckoning that largely did center around African Americans. We know that the outgrowth of that, though, was also a lot of people saying, don't forget about some of the other minority groups in this country who are dealing with a lot of the same issues.
There was an over 300% increase in anti-Asian violence during the pandemic. In fact, this is also catalyzed with the fact that Asian Americans experienced the highest rate of income inequality out of all ethnic groups. Over the past few decades, the income inequality gap between the top decile of Asian Americans have increased 77% more than the bottom decile. And the Asian immigrant population is expected to double within the next 2 decades. So the fact that this wealth gap is going to be exacerbated is something that we need to address right now.
Angel, you did do a pre-seed round, 1.2 million, I think it was, raised June 2023. Kicker Ventures involved. We've had Gold House Ventures as well, Alston. But these aren't quote-unquote household angel investing names. And I'm interested in whether things are changing, whether we are seeing more and more VCs come in showing that they can write checks to the right company with their own diverse backing, but also whether some of them age-old names in VC are doing the same thing too.
Yes, absolutely. We find that the funder-founder fit is extremely important. For us, when we were conducting interviews with investors, we found that the bar to which we were compared was higher. We had to work stronger, faster, smarter, just to get early traction. And we actually partnered with Goldhouse Ventures through their accelerator program, where they provided dedicated mentoring and coaching so that we learned the invisible rules of the game. What's important to highlight here, though, is with these diverse funds who are looking for those entrepreneurs who have asymmetric information on the market, it's important to know that minority founders are often over-mentored and undercapitalized. So while coaching is important, it needs to be followed with checks, because you can't start a strong organization without funding.
Do you have optimism those checks are going to come?
Yes, we actually have secured 1.2 million our pre-seed. We're open to additional investor conversations.
But not just you, Angel, because I mentioned how you've successfully raised pre-seed. But more generally, are you confident that checks will flow to diverse founders?
It requires a multifaceted approach where we need to increase the diversity of investors, we need to increase the types of businesses that are being founded, and we need to recognize that we all serve to benefit while we do these methods, because innovation drives economic growth. And as long as we can empower minority founders to drive the innovation, we all serve to benefit.
Well said, Angel Wang. Thank you so much for spending time with us, Head of Growth at Anise Health. Meanwhile, coming up on Bloomberg Equality, that world leaders, they've gathered in Paris as French President Macron seeks to build support for an overhaul of global lending architecture. We're going to discuss the push for better capital access for developing nations, not just diverse founders here in the United States. This is Bloomberg.
We want to provide all the financial means for those countries to be efficient in the fight against poverty and in the fight against climate change. This is the key purpose of this summit, and I think that the key point, the key purpose would be to define a new financial architecture.
Recognize that the world cannot continue in the shadow of an old imperial order that does not see countries, does not feel countries, does not hear countries, and worse, does not see, feel, or hear people. I ask us today to recognize that we cannot come to Paris, but let our directors go back to the IMF or the World Bank and it be business as usual.
I see great urgency in bringing the IMF's concessional window, the Poverty Reduction and Growth Trust, to a more financially sustainable footing. This is critical to make sure lower-income countries have adequate resources at the fund.
There's no way that there's adequate money in the governments or philanthropy or the multilateral banks. You have to bring in the ingenuity and the capital and the technology of the private sector. That's what we're trying to harness, but doing it in a way that brings people who know the private sector, understand its risks and management, and those people come to help us do things better.
This is Bloomberg Equality, and of course, leaders from Macron's summit for a new global financing pact is underway in Paris, weighing in on the importance of supporting the flow of capital to developing nations. Now, let's just dig in a little bit for a moment, Romaine, at what is trying to be achieved here. This has been like a new financing construct, a revamp of Bretton Woods. We heard from the leader of Barbados, Mia Mottley, actually the driving force behind this, and chief behind her was Macron, really trying to bring people together to better support poorer nations, particularly give them debt relief when catastrophes happen, often catastrophes driven by climate change. And there we have the focus on green infrastructure. We heard that in particular from Ursula von der Leyen, for example, of the EU, saying green bonds or indeed a carbon market. This can use capital markets, private industry to direct a better source of funding, ultimately.
These are a lot of solutions that are kind of driven partly by the government, partly by a lot of non-governmental organizations. But I am curious about the role of private equity in all of this. Let's bring into the conversation Runa Allam. She's the co-founding partner and CEO over at Development Partners International, DPI. It's a private equity firm, and it primarily deploys its capital across the continent of Africa. Runa, great to have you here on the program. I do want to start off with this idea of Africa rising, an investment in Africa that for years, decades, has been driven by organizations like the World Bank. It's been driven by government organizations. It's been driven, of course, also by some of the non-governmental, but more importantly, non-profit groups. How does private equity and for-profit capital actually fit into that equation?
Well, thank you for having me on the show. Private equity comes from private capital, and there's about $9 trillion of private capital in the world out of 300 trillion of private wealth. Clearly, the numbers are on the side of if you don't have private equity and private capital investing in any region, any continent, the region is not going to benefit. The gap in financing for Africa to reach its developmental goals is about 1.3 trillion. That cannot be done just by government, NGOs, and all other multilaterals. So private capital, which started, the whole industry started about 25 years ago in Africa, has a big role to play. We ourselves have invested or are investing more than $3.2 billion on the continent. And the big part of private capital being involved is that we not only put in capital, but we also help companies through new ideas, through mentoring, through bringing in all of the value add things that private capital brings in any region, including the U.S., from strategy to help in raising capital to Sigma 6 lean management.
So Runa, whenever we talk about emerging markets writ large, there's always a discussion about demographic changes and how that might aid some of the investment choices. Give us a sense as what you find in Africa, on the continent of Africa, that maybe gives you a little bit more, I guess, confidence that taking these sort of investment risks is not as risky as it might seem on the surface.
Well, the secular trends in Africa are all working towards private capital successes, investment successes. For instance, it's the youngest continent in the world. The average age is 19.5 years. It is also a continent that has a huge number of people coming into the workforce. By 2050, another 800 million people will come into the workforce in Africa, that bringing the workforce to 1.5 billion. In fact, by 2050, Africa will have 1 out of every 4 people in the world, and it will really power workforce and productivity in the world. So that is one trend. Another trend is urbanization. 13 out of every 20 biggest cities in the world by the end of the century will be in Africa. It's a huge trend in urbanization. Both of those mean that consumption is going up. We invest in companies that benefit from consumption. They are the banks, the pharmaceutical companies, the FMCG companies, education, healthcare. And the trend is with all of those companies' products. Rising tide lifts all ships, and these trends are very much with those companies.
Runa, why then are we hearing from World Bank, NGOs, Macron, Mia Mottley of Barbados to de-risk, to want to see non-private industry step in to help more private industry get comfortable when there's such an opportunity, it seems to me?
There is a great opportunity. It depends on the segment one is investing in. We are investing in the larger companies in Africa. There's not enough capital. There are many more companies in need of capital than there is capital. And I talked about the trends. Our companies, despite where the world is today in terms of inflation, in terms of devaluations, our companies are growing. In the last year alone, we had 2 companies that grew more than 60% in dollar terms and one that grew at 40%. We have companies that are in the digital space that have been recognized by Forbes. So there is quite a lot of success. Why then do we talk about this? Because the ecosystem needs to be built at all levels, very small companies as well as the larger companies. But I would say one of the biggest problems we have in investing in Africa is the perception versus the reality. If you look at large company investment, private equity, if you look at even venture capital, which is the newest trend in Africa, it is really the lack of knowledge about how much growth there is, how many good companies there are. With digitization in Africa, we have unicorns now. One of our companies is the newest unicorn in the world in Egypt. So in those both areas, I would say it's perception versus reality. In the other sectors, there can be help coming in through blended finance and other means.
All right, we're going to have to leave it there. A great conversation. Runa Allam there. She's the co-founding partner and CEO at Development Partners International, DPI. A lot more coming up ahead here on Bloomberg. This is Bloomberg Equality. Such a great show and a timely one today when we talk about access to capital, because at the end of the day, capital really does drive a lot of these changes.
And notable on a day where we do see these global leaders from more than 80 countries gathering to try and discuss how we can have more access to capital in the developing nations. But I got a bit of optimism from each and every one of our speakers saying, look, the opportunities are real here to outperform, to over-index and to bring in real money. It's just foreseeing it, really.
And what I loved about all three guests is they're not just here to talk about the problems. They're really out there sort of driving the solutions and making money in the process, but more importantly, addressing a lot of the inequalities that this whole show was designed to talk about.
Whether it be here in the United States or US vis-a-vis the rest of the world.
Absolutely, and we've got a great show next week. It's going to be our last show of this special edition of Bloomberg Equality, and we're going to go a little bit deeper into the divisiveness that we're seeing right now in the politics of equality.
And once again, CEOs, executives being drawn in to what is a very political situation. As we close out this edition of Bloomberg Equality, we've got to remember June is Pride Month. It remains a focus in the US and in London, in fact. The Bloomberg hosted a panel, The Power of Action. We heard from Robin Grew, the new head of Man Group, key hedge fund. Just take a listen.
Fundamentally, we are better when we are not having to navigate our fear of being found out at work, when we have to worry about which pronouns we talk about our other halves in, when we think about our holiday destinations and what you're doing every weekend in June. I don't know, but the point being, I'm reading a book by the... Anyway, that stuff is unhelpful for you. And when you rip off those shackles, when you don't have to worry about those things, you are 100% delivering.